Hi guys, and welcome back to my channel. This is DJ Journalist. Once again, you're back to my channel, guys. All right, so today, guys, I promise you that I'm going to be giving us new updates and also things that will help our trading and also help us to grow because that's our purpose this year. I told you guys that I will be doing a lot of videos and also implementing tools and some other stuff that can help you grow and make money because that is what I want us to also get in this 2024 to develop ourselves and also make us to become a professional traders and knows how to trade the forex market. So guys, if you are new to my channel, please do well to like, subscribe. We are looking forward to get about 2,000 subscribers, guys. So make sure please you help us subscribe to this very channel and also like this video, give us a thumbs up, give us like, share this video as well to do well so that others can also benefit from this video and as well as so that we can also grow this channel. So guys, please do well to like and turn on notification bell so that you get more updates whenever I post a new video. So guys, thank you so much for doing that. So now let's dive to this very, very interesting video, guys. So in this video, guys, I'm going to be teaching you how you can possibly trade like the banks, okay? Most of you guys must have been hearing about the banks, the big boys in the market. So guys, I want to show us how do these guys trade this market because a lot of us don't really know how these people trade or most times we get confused and many of you must have heard of it, but you don't really understand who are these people, who are these big banks, who are these big boys, who are these people that also control the forex market and all that. So here I'm going to be showing you guys how or you're going to have a clear understanding of how these guys control the market and how they trade and who are they. So follow, make sure you follow, don't skip this video. Make sure you follow this and watch the end of this video, guys, so you can understand every detail or everything I'm going to be saying, guys. Okay, so we're going to start with the number one, guys. So you can see here, we're going to be starting with what are the difference between institutional traders and the retail traders. Okay, so I'm going to be giving us the two things we need to know about these two types of traders. Okay, institutional traders and the retail traders. I know many of you we don't even know. Maybe you'll have had names of these kind of traders, institutional and retail traders, but yet you don't understand them. So follow me, guys. I'm going to be showing us who these people are. Okay, so we're going to start with the understanding the institutional traders. Now we say institutional traders are traders that trade large investment and funds for big banks in order to generate what money. All right, so they trade large funds. Okay, they are traders. I hope you understand that these people are traders that but their own style of trading or their own work is what they do is that they trade for big banks and you know banks, big banks and commodities. Okay, so they help them to trade. All right, so this is how these guys also do. That is why and whenever they trade long-term trades. Okay, they trade long term. Sometimes you can put your chart and you see sometimes the market is on a very long buy or market has been buying or selling for a long duration of time. Most times they are the one. And I want to tell you that these people as well, that's why you see them that because of what they have, they tend to also affect the market because of the fund. All right, because of the money they have, their money cannot be compared with what we traders or retail traders have. So the money they have in the market or they put into this is very, very big. Okay, so it's very, very big and it's a large fund, which we or you and I we cannot go against them. So that is why you see them most times the way they trade, the money they put into the forex market is very, very big. They put in big, huge money into the forex market. And that is why when we get them, whenever they push the market in some certain direction, you cannot reverse it because what you have, we don't have what it takes to go against these guys in the market. Okay, that is why we traders tend to follow their footsteps. All right, so the next kind of trader we can see again is the retail traders. Okay, this kind of traders are traders that sorry, excuse me, guys. This kind of traders are traders that just like you and I, okay? So there are traders that trade the forex market, but they are just like you and I. Okay, these people are people that have smaller funds, maybe they trade personal accounts and all that, right? And mind you, I said this that no matter the amount a retail trader have, cannot be compared with what the institution traders have. Okay, even if you have up to 1 million, it's not still enough to what you cannot reverse or go against what these people have because what they tend to trade is very huge, big funds. Okay, so you cannot go against what these people have. That is why most times you find out that you might be going on a particular trade and you find out this because of these guys, you cannot go against them, you cannot beat them. That is why you hear them say if either you join them, you can't beat them because these are the people that have the real, they have the real money, big money that you need to follow them, follow their footsteps to also make money in the forex market. So that is why we traders tend to follow this institution style of trading, okay, so that we can also get money from the market. So these are how these people trade the forex market with huge funds and commodities, okay. So now let's look at example of some things here. Okay, you can see here I drew some diagrams here before me. You can see now in these diagrams here, guys, you can see what I want to show you. I give an illustration of how these guys operate or do what they do in the forex market. Okay, you can see here these two charts before me. Now, can you see this guy that look at this market here? We have market liquidity. You can see here that the market was in a range, equal highs and lows at this point in time now. Okay, now you can notice here, guys, you can see that this what I told us. Remember, the last time was the last video I did about liquidity. I told you guys that liquidity is where there's money resting on every high and low. There are money resting there. You can see here that there's money resting here and also money resting above below this level here. So, but you can see what these guys did here. They have to put this market because they know sellers and buyers are here. So they know that many traders, not only you, a lot of traders will be selling at this point here. And they also understand that a lot of traders will be buying at this point. So this is how this guy is sent to move the market. Just follow me, guys. Make sure you don't skip this video if you understand. So look at what they do. When you enter and you are selling this market from here, you find out that when price gets here, they tend to push the market down here. And you think, okay, this market is going to go down because you are selling from this point here. Before that, the market was pushed up again. Now, after the market has pushed up, now a lot of traders will be here waiting. Okay, let's see how this market can give us a sell around this point here because the sellers are here. Okay, so now many traders will have set their sell stop here or whatever to make sure once price gets here, they can sell off the market from that point there. But you notice that when the market push here, you tend to give them what break above this and take out the surpluses of those that are selling here, okay, of retail traders selling around this point. And buy when price pushed up here, you can see what happened, guys, around this point here. So now buyers will have been saying, okay, now let's take this market because market has broken this high. You can see this level has been broken, and I feel this market wants to buy. Then you find out that price give them a false breakout for buyers. And this is how the institution works. You can see here now, not knowing that the institutions are trying to take out liquidity because these are liquidity. So they are trying to take out liquidity that are resting here, money that are resting above or this level. They are trying to gather the money around those points there, and they're trying to sell off this market. So they are only trying to gather the monies of retail traders around this region. That's what they are trying to do. All right. So now those that entered there, maybe traders that entered there for a buy were stopped out. So market now take out liquidity. Now looking for a good, maybe another block around this point here. Okay, a block that is resting here or gap that they went to fill in those gaps or test out that block above this liquidity zone. Now let me give us one tip you need to understand that. Oh, sorry guys. So sorry. Now let me give us one thing you need to know about. Now the thing you need to understand about these guys, how they trade is that they always tend to take out liquidity. Okay, liquidity zone, they always take out liquidity zone. Now you can see that we have a liquidity zone around this point. These are liquidity level. So most times you hear me say, I don't trade liquidity area. So I tend to trade off liquidities, okay? Because at this point in time now, already we have equal lows there, equal highs. So markets are trying to take out liquidity that are resting here. Okay, that's why sometimes you see traders, you see a pattern. So this pattern has been formed, and let's go into the market, and you find out that it's only a trap because the market will definitely want to take them out. So looking at this now, you can see how this area was taken out, and you can see where this institution people or institution traders now came and take their orders because their orders must have been resting around this point. Sorry. So their orders might have been resting around or above this liquidity zone. Yeah. Okay. So they now want tend to take out their orders that are remaining around that point there because definitely there must be institution orders resting here. Okay. So institution orders were resting here, and these guys have to take their orders that were resting around this point here to sell off this market. Now you can see how they take out our liquidities that were resting here and liquidities that were resting down here. All right. So this is how these guys tend to do. Just giving you guys illustration of how these people tend to push or how these people tend to take out traders as off or retail traders off liquidity areas also. Okay. So guys, now let's sorry about that, guys. Now let's look at these other charts we have before us here. You can see this again, same thing here, but a different concept. So you can see here, guys, that you can see we have liquidity here, equal highs here. You can see, and this point too. Now you can see these are liquidities. The same thing applicable here. So traders that entered here. Now you can see here the market when it gets here. Now they entered sellers that took price here, and they sold market here, and you can find out that buyers that wanted to buy here were stopped out. Okay. Now they thought when price comes here, they want to take their buy because they know that buyers, if market has bought here 1, 2, and 3, so the fourth time market should buy. But not knowing that at this point in time, yeah, was liquidity. So market was trying to take out liquidity here. So they entered here and market was take them off. Okay, so they are taking out around this point here. And after them being taken out, you can see here that as you can see, guys, that they're taking out around this point here, and you can see that buyers now, this is where they came to take their orders, okay, because they were buy orders resting below off this liquidity zone here. So they have to take their orders there. You can see, so at this point in time, they were taking out here. So instead of them to wait patiently at this point here, and because to catch the big move of the market, big move in the market. So they entered here because they entered too early and they were liquidated at this point, taking out stop losses were stopped. And you can see how the market guys now give this big move the upside here. Okay, so that's why most times we tell you guys that be patient with the market, don't rush the market. Sometimes you can be liquidated out of the market. So always be patient and wait, guys, to get a big move in the market. Okay. Now, guys, having shown us these illustrations here in the chart. Okay. Now let me give us one more before I go to the chart. Okay. One more example before I go to the chart to show us this particular thing. Okay, guys. So now let me show us, guys. Now let me give us another illustration. Okay. Now let's say for example or for instance, okay, let me do this, guys. Give me. Okay, guys, so let me give us one more illustration before I go to the chart. Now, let's say for example, we have your market buying on the 8 hours or the 4 hours time frame. Okay, let's say we have a buy on whatever time frame, 4 hours or 1 hour time, 4 hours time frame for 8 hours. So let's say we have a buy. So you have this buy happening here. Okay, so you have this buy going. Okay, guys, so we have this buy moving currently right now, and let's say on the lower time frame, let's say the 15 minutes time frame, okay? So we might say start saying something like this. So guys, I want to show you something here. Make sure you follow me, guys. So okay, guys. So now this is another example, guys. So you can see here that in this chart now, currently, now this is 4 hours. Okay, this is our 4 hours time frame, man. We discover that market is buying. Okay, so now we find that the market is buying at this point in time. All right. So now this is the general market trend. Okay. Now because we have what we call the BOS, that is break of market structure. Okay, so market was breaking this highs and breaking these highs. Okay, now price was breaking this, and now remember we have this is the low and this is the high here, which is our area we should pay attention to. Okay, so we have this area here and we have this low and this high at this point here. Now if you look at this was a sell, but if you go to the 15-minute time frame, this and when the market was moving, guys, when the market was moving, you find out that at this point when the market was moving, you will find out that these are retracement market was creating. The market was creating retracement as it was moving. Now you can find out again that at this point in time, we also have market retracement. Yeah, okay. Now this was a pullback, all right, on the lower time frame, which might give a structure, okay. And now many traders will feel that the market has reversed because they are seeing this retracement happening on the lower time frame. So now not knowing that the market was actually trying to push to give the buy continuation of the market. So when price comes here, now this is how these guys institutional trader trade. So when price comes to this point here, the market now had to what continue the buy. All right, so you can see how price now continue the uptrend with the upside. So you notice most times traders always fall victims of these things. They will tell you, I don't know, I saw this market selling and automatically started buying. Now this is the reason because you felt the market was or market has changed. Market has changed its direction, or because you feel the market has changed its direction. Okay, so you felt that the market has reversed, but not only the market has not what the market has not reversed yet. All right, so market has not reversed its direction. It only had to so now at this point in time you feel the market has already changed its direction, not knowing that the market only had to what give a correction phase. Okay, now this period here was area where market was correcting itself. Okay, now this was market correcting itself around this point here. So after the correction, now that was what brought about the sale. And after the correction, you can see how price now went back to where there was a buy order. Okay, where the buyers or institution buy orders were resting. Okay, which I'm going to be showing you guys, which we talk about the what SMC. Okay, yeah, what we call the SMC, smart money concept. Okay, now this is how this institution traders use tend to always catch their orders. All right, now you can see here that they were buy orders resting here. Okay, so those that were selling this market, those that were selling the market around that point here, they were what? They were taken out or stopped out, because you can see here that buyers are not done with their buys. So here was just a correction there to continue the trend, because we saw this, that market is giving us a bullish move to the upside. So you can see, or you can figure out why, reasons why most times traders tend to be stopped out in the market or confused in the market. So this is how these guys tend to trade the market, guys. If you can understand how institutional traders trade the market, trust me, you are going to be making money in the forex market. It's only if you can understand how these guys trade the forex market. That is the most important thing you need to know whenever you are trading the forex market. I figure out that concept until today. It has really been helping me massively. Okay, how to catch the big move of the institution, how you can also trade the market like the big boys or the big guys. Okay, now here we are, guys. Now I want to show you guys an example. Now let's go to the chart. So let me give us illustration of how these guys trade the market. Okay, now guys, you can see here that for example, this is this 25. Okay, now I want to show you how these guys trade the forex market, or how they move the market. You can see here, guys, that we have this market at this point here. As you can see, this market was a bullish trend. Previous period was bullish, and before the sell came on board. All right. So as you can see, guys, that this market here was buying for long, not until the market reversed. Okay, not until the market reversed around that point there. So now I want to show you guys. Let me use this recent happening, or this recent market trend, to show you guys what the market was doing. Okay, now let's go to the 8 hours time frame, so you guys can see actually what the market was doing around that point. So you can understand how these guys move the market, show you that how to move the market. Okay, so let me let me use let me use VIX 75. Okay, guys, let me use VIX 75 so that you guys can see VIX 75. Let me use VIX 75 assets. Let me use VIX 75. Okay, VIX 75. So let me use that asset. Okay, guys, as you can see, this is V75. Okay, now I want to show us something here, guys. I want to show us something very, very interesting on this very asset. Okay, now V75, V75. Okay. Okay, guys. Now this is an example of what I've been saying so far. Okay. Now, if you study this market very well, you can see, guys, that here there were a lot of liquidity here. Now, price was liquidating traders around this region. You can see for a longer time. Okay, now we have buyers and sellers taking their orders here. Okay, we have buyers and sellers taking their orders around this point here. Can you see, guys? So a lot of buyers and sellers were here. Many people, many traders were in this market. Okay, many retail traders were in this market taking their orders, buying and selling this market around this point here. So when market comes here, now when market or when price comes around this point, they take their sell. You can see here, and also you can see when price come here, they sell. When price comes to that point, they sell. And here for buyers, the same thing. When price comes here, they buy. When price comes here, they buy. So buyers and sellers were in this market, as you can see, guys. So they were taking their orders, buying and selling in this very market. Not until you can see here, guys, that market had to take out liquidities there that was resting. So you can see here that at this point in time, guys, market now take out the liquidity that was resting above this zone here. Now take it off. You can see institutional traders now have to clear out liquidity that was resting here, because they knew that many traders stop losses are here. So what are they doing? They are trying to take out stop losses of retail traders. Okay, wherever there's a stop loss of retail traders for buy or sell, they are there to take out that stop loss. Okay, now you can see here that those that were buyers and sellers were just enjoying their buyers and sell around this zone. Now look at the move of institutional traders. Now they came here and take out the stop losses of traders that were selling here that take it out with this buy move. Okay, now you can see this institution buy move. They break out this stop losses, or take out stop losses of sellers here and move this market here. Now, buyers were rejoicing and say, okay, this market is going to go in our favor. The market will keep buying and keep moving to our direction. Now, let me zoom out. Okay, guys, now you can see this now. Now you can see after price has broken this, you take out the stop losses of buyers here. They're resting around this region here. As you can see, guys, now buyers entered here in this market. Now buyers entered in this market, guys, as you can see. So as they enter this market, now buyers started buying, not knowing that the market, we are trying to look at for where institutions are keeping their orders. Okay. Now, guys, you can see here that institution orders were here. Now let me put it like this. Okay. Now we have institution orders. Now, what are these institution orders? So you can single it as the order block, can find out another block sell, other block buy. Okay, and they can also look for institution buy orders. Okay, where their orders are being kept, either for a buy or sell, to catch the big move in the market. Okay, now there's institution move here. If you take notice, guys. Okay. Now you can see, guys, at this point here, as you can see that we have institution buy orders around this point here. Can you see this, guys? Now you can see that there's a buy order around this zone here. Okay, now if you notice, you see that now at this point in time, look again, we also have institution sell orders here and sell orders here. You can see we have other block here and also other block here. So now let's highlight those zones. Okay, now guys, let's highlight those zones. We highlight those zones. So follow me, guys. I'm showing you guys how these people, how you can trade the way these guys trade the market and you make money from is trading with the big banks. Okay, how they catch the move in the market. Now, let me put that here. Can you see, guys, now? Can you see this? So now, guys, can you see this now that we have institution buy orders? Where the institution sell orders, yeah, you can see that we also have these institution sell orders around this point here. So I will need to put price or put this around that region here. Okay. Okay, guys, now as you can see that we have this other block. First other block was ignored. Okay. Now this other block was ignored. We have two other blocks, three other blocks here. So the first one was ignored. This two was ignored. Now, none of the price now came into this last other block here because institution candle was resting there, you can see. And that is where this buyers or where price had to push the market and they went there. When they get to that place, you can see how they reversed the market from that point there because institutions are waiting for sellers here. Okay. Now these are where they have been waiting to sell this market. Now here you might be waiting. Traders have been here waiting. Now you can see here again. Let me explain this side. What happened here? Okay, now you can see here that this was also a good level, but these people don't really want to sell this market here because they find that it's too cheap for them to sell, or too cheap for them to sell market around this point here. And you can see what happened here. They induced traders that entered around this point here. So you can see how traders were induced. Those that entered that entered at this point here, were taken out, were stopped out. Now, until they push the market to this place there. Can you see, guys, how these institutional traders now push the market, creating a kind of a structure, not a structure, liquidity. They have to take out liquidity. Okay, now this was what we call buy side liquidity taken out. You can see here. Now buyers that entered, they were taken out, stopped at market. Now they pushed, they thought the market is still going to continue the buy and they were taken out. Yeah, you can see how the market, guys, as you can see that the market now reversed from that point here. Okay, this is where the institution now to take their orders because orders were resting here. So we have sell orders that was resting for long. This order have been kept for long, guys. This is how these people tend to do. They always tend to keep their orders waiting or pending. It can take a longer time oh guys, this thing can take a longer time. If you are patient enough, that's how we tend to catch the market. Now you can see how this was playing around with traders here, and not until price now had to get to this point here, and this is how they now had to take their orders was triggered from here. And you can see how this market has been selling for long, guys. Can you see? Can you see? I told you guys that don't forget what I said. They always tend to hold price for what a longer term. Now, this is how these people now you can see how they are holding market. Price is just giving them a structure. Market is just going down, going down. The direction you can see after price hits here, you can see how market was just going down, a breaking structure going down, and giving them this long move to the downside. And with the market is selling. Now, if we calculate and check for a longer time, let's say you enter this market at this point, do you know how much you'll have gotten from here? How many pips you'll have carried? This market has been selling for long, although which I'm also on the sell. I tend to catch my entry around this point, which I'm going to show you guys how I joined my own train of this market, because this market is selling. I told you guys that you cannot go against the institutional traders. Either you follow their footsteps, either you follow them, or you are being kicked out. So this is how these guys are pushing this market massively to the downside, guys. You can see now this market has been selling for a longer time. Can you see? This market has been selling for a longer time, guys. Now, if anybody entered this market now, will have been a massive profit or massive money because you waited. Okay, that is another thing again about this. These guys are very patient. So because they wait patiently for them to catch the move in the market. And you can see how this market now is going massively down to the downside. Okay. Now, this is how these guys now catch the market. I told you guys. Now, they trade off. You can see that this was areas of liquidity. Okay. The Asian section. Now, the liquidity was here. Okay. So they tend to wait. They were just waiting patiently. Buying sellers, those that were retail traders that were here, they were stopped out. Okay. Now, to when price now get to where actually these guys want to move the market, as you can see now, and they push price all the way down. Okay. Now, let me show you guys how I was able to catch my own trend of this market. I had to join them because I saw where the market was actually reversing from, and I had to join them in this move. Okay, as they're moving the market to the downside, I have to also have my own part of the game in this market. Oh, let me show you guys how I joined these guys in this market. Okay, now I had to let me go to the lower time frame. So let me use the 4 hours time frame first. So it's called this daily time frame. So let me go to 4 hours, guys. So now on the 4 hours time frame. All right, guys, you can see here, guys. So this is where I was able to join the market. Now you can see, notice that the reversal was very, very strong. It's massive. Every on the lower time frame, the market is still selling. You can see even on H4 time frame, it's telling us the market is on a sell, as you can see, guys. Now you can see here that this is where I was able to catch. I was able to catch my own market move or reversal. Now this is where I joined the trend. Now I saw this happening in the market or in this time frame here, so I had to put in my. At this point, this is where I entered. Okay, this is where I took my own sell market. Okay, now I saw this happening here. Okay, you can see here, guys, that the market is going down. So, but we have this high here. Okay, now this is a high which we already have in our mind. We know this market is going down. All right. So now before the market started going down, you can see here that market was trying to liquidate traders. Yeah, although it created something like a channel here. Okay. So you can see here which acted as a support. So I was trying to push the market down. I'm trying to push the market up so that sellers can push the market down. All right, so you can see here, and this acted as a channel and push price as a support, I mean to say, and push price to this other block here. You can see, guys, on this 4-hour time frame. So as you can see, this is how I was able to catch my own sell. So you can see here that although I marked this point, so waiting that if price should get here, I can take myself around. So this place was my first zone for sell, and why this place was my second zone for sell. So now let's go to the 30 minutes time frame. So let's see what happened here. All right, guys. So Okay, guys, now as you can see here, on the 30 minutes time frame. Now, guys, can you see what happened here? Can you see massively? Now you can see these guys that this was our other block here. You can see this was our other block here. And you can see how price action now is respecting this other block here. And where the market is pushing, where the market went to, you can see how the market went to this point here, gave something like a double top pattern or retest that area here. Okay, this point here, you can see how price retest this zone. Okay, you can see how price retest that zone. Okay, now went back, came down, went back again. So that's the same zone, and this is where I took my entry from, and which the market. Now we now have a break of character. Okay, who we call CHOCH. You can see market broken a change of character on this time frame. You can see here, and the market continue. Now you can see even if you miss that first entry, which is around this point here. Okay, now you can also time your next entry at the low, at the retest of this low here. Okay, you can see this, guys. So this can be your retest, your second entry at the retest of this low, which you can see after market was taking a liquidity and have to go to this place here. So this will have been your second entry. You want to get into the market when price comes to retest this low around that point there. And you can see, guys, this market has been dropping since that period. Okay, now market has been going massively down to the downside. Okay, can you see this, guys? This market has been falling down and down. Okay, so this is how, guys, you can be able to catch the market, as you can see, guys. So it's very easy to do this, guys, if you understand the system of how these things work. Okay, so very easy to trade and follow the big boys. Okay, this is how they catch and hold trade for long. Okay, now for those of you that have been asking me how do you catch swing trade, this is how I catch my swing trade, because I'm always a patient and always want to wait for the institution move. Okay, so when they move like the banks, I always want to go in and catch this big move in the banks. Okay, so guys, hope you enjoyed this video to the end, guys. If you have any questions, make sure you drop them on the comment section. You know I do reply your questions and I will be there to answer you. Okay, and we'll also drop my number. If you know you are not say convenient with your reply, you can also chat me up and I also give you a reply, okay, for better understanding. So guys, make sure you follow this and go and try it on your chart, because I told you guys that our goal is to build you guys so that you can understand the market and also become a professional. So make sure you go and backtest this thing, practice it more so that your eye can open up to see more of these things and understand how market operates. All right. So guys, I'm waiting for your questions. I'm waiting for your comments. Don't forget to like, subscribe, and share this video, guys. Thank you so much for staying with this video. Have a wonderful day, guys. Thank you.